welcome back to Tech Brutal FS, and in today's video I'll be teaching you something very important, very important, and it's an indicator. We may have been using it, but you may not really know the essence of it. It's a very important indicator. It is the Awesome Oscillator, which was authored by Bill Williams. All right, this is the Awesome Oscillator here. All right, it's actually been treated as histogram. Are you getting me? It's a histogram indicator, and the Awesome Oscillator is based on the difference between two simple moving averages, the convergence and divergence of the fast simple moving average 5 and the slow simple moving average 34, allows defining the direction and the strength of the movement and finding the reversal points on the chart. All right, so it is quite the same like the MACD, but totally different from the MACD. All right, it indicates the plot between the two different moving averages, and it's a great tool to show us the trend, the reversal, and possibly the correction of the market at any given time. All right, so we are going to look at three signals we can get using the Awesome Oscillator. There are three signals we can get using the Awesome Oscillator. All right, but firstly we would look at the first one. The first one is the saucer signal. The saucer signal helps us to show, it shows how the market, when the market looks like a saucer, the bottom of a saucer. That's what it means. The saucer signal forms when an oscillator histogram appears a cavity looking like the saucer bottom or top. Are we together? All right, so we are going to see it very quickly now. So looking at this point, at this zone here, this looks like a saucer. All right, so if we look at this very well, this area very well, this was a moving market, an uptrend, but then we saw a reversal, a correction here, a correction to form this zone, to give us a zone now, a higher high and a higher low, this zone now, to correct this zone. So this correction to correct this demand and supply zone here. All right, so that is, once we see this saucer signal here, we wait. So if we want to buy after the close of that the transformation between the colors. You see the red color and the green. The green is indicating a buy, while the red is indicating a sell. So we will enter the market after the correction right here, after the correction. So when we enter after the correction, you can see a buy from this point up to this point. So if we want to set our stop loss would be below, just right here. That's where we set our stop loss. That is the nearest or the previous local high or local low, the previous local low, because we are actually buying. All right, that's how to trade the saucer. Then let's look out for another place where we can get the saucer as a selling point. All right, you can see this one, this correction is still on the same point. Look at it too here, look at it here, right here. See this correction after this candle. If you enter, you would have taken this is a 15-minute time candle. So the best time frame is the 15-minute time. So you see the correction. Look at this, another one right here. Look at another one right here. After the correction, you can take your buy. Look at, after this one, you can enter here and take it up to this point. Then you can exit the market. All right, All right. So that's that for trading the saucer signal. So another signal, another pattern, another way of trading this. All right, another way of trading this. I'll still put some pictures so you can understand it better. So another way of trading this is the closure of candles or the closure of the histogram above above a certain level. So trading using this the crossing over of the zero, you can see the zero line here. You can see the 0 point here. This is our zero line here. Look at it right here, the zero line. So to trade this zero line, we use it once the histogram is above the zero line. We don't enter immediately. We wait for the close of that candle above the zero line. All right, for us to take a buy. Okay, so for instance, we have this area here now. This is a switch over. You see, had it been we just entered once the thing just switched, we would have been in losses. All this zone here would have been in losses. You get it? But if we had waited for this one now, a confirmation, you see it? So we would have just entered around this zone. Entered here. Probably let me use an arrow. Let me use an arrow so you see it clearly. Here, I've entered around here. All right, would have entered around here, this point here. Now that's where we should have entered. So once you see the crossing, you don't just enter. Now watch out for this one too. Watch out for this one. Once it crossed, this is it. It took this candle up here. So we don't just enter once we see the crossing. We wait for the closure of the histogram above the zero level. So another one is for sell. If we want to sell, you see this point now, you see this point, this is a selling point. You see this crossover here now, we enter here. All right, this is where we are supposed to enter. We enter right here. See this candle here, you see it, we sell it down here. We don't just move immediately once we see the turning. Okay, look at this point. We don't just move. We hold on. And once you're trading these strategies or this using it for signals, you have to hold on first to see a clear movement. To see what? A clear movement. Then you can now enter the market. All right, okay, that is that for that. Now the last part of this video, I will continue it in the next video tutorial. Thank you so much for watching, and always try to read through. Don't forget to comment, like and subscribe. Share the video to help other traders. We are here for profit. We are not here to make losses. All right, thank you so much.